Charlie Munger, the 99-year-old vice chairman of Berkshire Hathaway, is a pioneer and trailblazer in the field of value investing. He has amassed a personal fortune of $2.3 billion through his investments and has been invaluable to investors in recent years because of his clear thinking and blunt manner. In 2023, investing will be more difficult than usual due to the projected 20% market decline. Interest rates will likely continue to rise as the Fed reaffirms its intention to lower inflation to 2%. Investors must first ask themselves whether they should put down a deposit right now, knowing that trouble is on the horizon. Charlie believes that regardless of market booms or busts, you must live your life in both episodes. Emotional resilience and self-control are critical in investing. To be a successful investor, you must find and hold strong, expanding companies and buy the hold stocks in good times and bad. That is why, on InvestWise, we provide you with all of the information you need to be on time with your investments. If you find it useful, please consider hitting the like button and subscribing. So, where can you put your money to be safe from what's to come? Charlie recommends avoiding diversification and focusing on 4 resources that should perform well with any luck: Berkshire Estates Costco stock, Lulu's ready-made clothing stock in China, a couple of daily journal stocks, and several apartment buildings. Most people lack the intelligence required to filter out 20 safe assets, and most value investing is waiting for the things you want to buy to be on sale. If you are enjoying this discussion on investing, don't forget to like and subscribe to our channel for more insightful content on finance and investing. Charlie emphasizes that to achieve financial security in the future, it is crucial to focus on long-term investments, exercise patience, and manage your investments effectively. By maintaining a long-term investment strategy, investors can reap the benefits of compounding interest over time, which can significantly grow their wealth. In addition, Charlie and Warren Buffett stress the importance of making the most out of limited opportunities. When the market experiences a downturn, it can be tempting to sell off investments and cut losses. However, by holding on to strong companies that can weather economic downturns, investors can maximize their returns and come out ahead when the market recovers. Furthermore, Charlie and Warren recommend investing in companies that have a proven track record of success and can withstand the ups and downs of the economy. By conducting thorough research and analysis, investors can identify these strong companies and capitalize on their potential for long-term growth. Charlie and Warren's investment philosophy involves a focus on long-term, patient, and manageable investments that can withstand economic downturns. By making the most of limited opportunities and investing in strong companies, investors can secure their financial future and build long-term wealth. His most helpful advice is to practice emotional resilience and self-control in the face of unpredictable events like the ups and downs of the stock market. By focusing on strong, expanding companies and investing for the long term, investors can weather the storm of market downturns and end up financially secure. What are Charlie's core values for making billions? Charlie Munger's investment philosophy is based on simplicity, emotional resilience, and a focus on long-term goals. By applying these principles, investors can increase their chances of success in the stock market, even in difficult market conditions such as those expected in 2023. Investing is never without risk, but by following Charlie's advice, you can approach the stock market more confidently and achieve your financial goals over the long term. Charlie Munger's investment philosophy is based on his deep understanding of value investing and his experience as vice chairman of Berkshire Hathaway. He has advocated that investors focus on finding strong, expanding companies and avoid complex investment strategies or attempts to time the market. Another important aspect, his emphasis on emotional resilience and self-control in investing. He believes that the ups and downs of the stock market are inevitable, and that successful investors must be prepared to weather these fluctuations without letting their emotions guide their investment decisions. By focusing on long-term goals and remaining patient during market downturns, investors can increase their chances of success and avoid costly mistakes. Simplicity is another important tenet of Charlie's investment philosophy. He recommends avoiding excessive diversification and instead focusing on a few key resources that are likely to perform well over the long term. This allows investors to reduce their risk and avoid getting bogged down in complex investment strategies that may not be effective. Charlie's philosophy offers a useful roadmap for investors looking to navigate the challenging market conditions expected in 2023. By focusing on strong, expanding companies, practicing emotional resilience, and keeping things simple, investors can increase their odds of success and achieve their financial goals over the long term. How long can it take? Of course, successful investing is never without risk, and there are no guarantees when it comes to the stock market. However, by following Charlie's advice and focusing on long-term goals, investors can approach the stock market more confidently and make sound investment decisions that will benefit them in the long run. Charlie Munger's investment philosophy is based on his experience and deep understanding of the stock market. By focusing on simplicity, emotional resilience, and a long-term perspective, investors can navigate the ups and downs of the market and achieve their financial goals over time. As 2023 approaches, investors would do well to keep these principles in mind as they make investment decisions and plan for their financial future. This investment philosophy also emphasizes the importance of avoiding short-term thinking when making investment decisions. Instead of focusing on the immediate future, investors should be patient and take a long-term view. In this way, they are more likely to identify high-quality companies with strong fundamentals and invest in them for the long term. In addition, Charlie believes it is important to think independently and avoid the herd mentality that can be prevalent in the stock market. Investors should do their own research and analysis to identify investment opportunities rather than relying on the options of others or following the crowd. Charlie also emphasizes the character and integrity of the companies investors choose to invest in. He believes that companies with strong ethical values and a commitment to their customers and shareholders are more likely to succeed in the long run. Investors should look for companies with a good reputation for honesty and integrity and avoid those with a questionable track record. As the economy continues to face challenges, it's important for investors to consider the impact of inflation and interest rate increases on the stock market. In this current state of affairs, it's crucial to adopt a value investing approach to navigate through the turbulence. To better understand the market's future, it's worth considering the advice of investment experts like Charlie Munger. How can you keep your asset as safe as possible? One of the key principles of value investing is diversification. It's commonly advised to maintain a diverse portfolio with investments in different types of assets and industries. However, some financial experts argue that owning 4 high-quality investments is enough. While it's true that a diverse portfolio can spread risk, it's also important to consider the quality of each individual investment. Charlie Munger and Warren Buffett often emphasize the importance of investing in strong companies that have the potential to weather economic storms, even if the management is less than ideal. To find these strong investments, Munger suggests focusing on companies that are simple to operate and have a reputation for resilience. He believes that the presence of a competent leader can be a significant factor in a company's success, but it is also important for the company to have the ability to maintain its strength, even if the management is not at its best. In this era of rising inflation and interest rates, investors need to maintain composure and focus on the long term. While it may not be possible to achieve the same returns as in 2021, investors should not be discouraged by this. Instead, they should keep an eye out for deals and opportunities and maintain a simple approach to investing. Munger's advice for 2023 investors is straightforward. Maintain composure, invest for the long term, keep an eye out for deals, and keep things simple. By following these suggestions, investors can navigate through the challenges of the current market and come out on the other side in a strong position. The stock market may face significant challenges in 2023 due to inflation and interest rate increases. But investors can take comfort in knowing that value investing principles can help them weather the storm. By focusing on strong companies, maintaining a long-term perspective, and keeping things simple, investors can come out on the other side with a successful portfolio. If you love this video, subscribe, leave a like, and watch this one too.